And this podcast, we're going to be discussing um, trust and trust instruments. To get this party started, I want to thank all of my subscribers. We have 207 subscribers at this current time. And so we want to thank our subscribers. Uh, thank for everyone who deemed this channel subscribe worthy. And we want to live up to your expectations, especially if you're expecting to get content rich. And if you subscribe because you saw a video, and on that video I said, okay, this, this channel contains content rich information. And so that was your expectation, even if you hadn't viewed any, you may have subscribed. Okay? So I hope we're living up to your expectations. Thank you for joining us. Welcome, welcome, welcome. Okay, what we're going to be discussing today is deeds and trust. Deeds and trust instruments, and which are financial instruments. We really need to do a broadcast specifically discussing what is financial instruments. We were doing, and we still are, because we have not completed it. And that is what this channel is sourced around: financial instruments and bills of exchange, and disseminating knowledge and information concerning how to prepare and circulate documents properly. Let's get it. Okay, this broadcast is talking about inheritance and what happens when people don't set up their inheritance correctly. And people can connive and do certain things. So this is common issue with inheritance. You have people stealing, you have people angry because they didn't get what they wanted or whatever. So you have a lot of discord concerning family inheritance. And so since that is a reality, we want to deal with those issues and be prepared mentally, at least, for any attacks. And also, if you have not set up your will and testate, then it is best to have knowledge of what is best, how to word your documentation and so forth, so that you can do what's best to prevent any of this kind of chaos. But after the chaos has got jiggy, no matter what you do, it's always going to be a problem in the family. You're always going to have somebody in the family greedy or just a facetious person. Okay. Causing discord. Because sometimes it don't even involve money. Sometimes people just be being messy. Okay. So let's see what we got to do about these inheritance deeds.
We'll get to that in a minute. Families listen for money talk when they're trying to catch an inheritance thief. Did the brother mention dad's bank account? Did the sister talk about the house? They're listening for the wrong thing. In my investigations, the evidence actually builds the case isn't talking about money. It's talking about caregiving. Once you know the phrase to listen for, you start hearing it everywhere. Once families start to listen for this, recording it, paying attention to it, it goes from we suspect something to we can prove it. As an example, in Wisconsin, a judge ordered a family member, brother, that had a power of attorney to repay $400,000 to his parents' trust after investigators pulled calls to their bank and caught him impersonating the father. This brother pretended to be the father, called up the bank, and transferred money, not using the power of attorney, which would have been legitimate, but he would have had to do it in the right way. He did it in the wrong way, so he couldn't use the power of attorney. When I'm hired to investigate this undue influence, I'm not looking for the smoking gun. I'm building a pattern. 4 things need to show up across all the evidence. The vulnerability of the parent. Are they in bad health? Do they not have the same cognitive ability? Are they isolated? Are they away from some of the family members? Number 2 is, does the influencer have an opportunity? Are they in a role of giving care? Are they controlling access? Are they there every day seeing the statements come in the mail, seeing the insurance bills? Number 3, is the influencer, the bad guy, so to speak, predisposed to doing that? Do they have a financial motive? Are they short on money? Are they jealous of another family member who has more money? Do they have a history of manipulation? I'm sure you can relate to that. Many people in your family manipulate others. And the last one, number 4, is, does the result favor the influencer? If there's a transfer, if there's a title change to the will, did it favor the person who you suspect? If it favored somebody else, then maybe not, but did it favor the person you suspect? Of those 4 things, 3 are usually easy to document from records. The third one, predisposition, is where the investigators have to rely on you or rely on what they see. And here's what we notice. During the time that this fraudster, this influencer, was dealing with the parent, did they say things like, if you do this for me, I'll keep caring for you. The other kids really don't care about you like I do. You should think about that when you talk to the lawyer. Or I'll withdraw my attention to you if you don't sign this. Any statement that links caregiving to inheritance or caregiving to connection puts the aging parent against other family members. And they might be so desperate to maintain their caregiving or their connection to that person that they'll fall into whatever influence is happening. Couple examples are things like a conditional threat. If you change your will, I'll keep taking care of you. Or saying something about the other family members, like the other kids are waiting for you to die to take your money. Or don't tell your daughter about this, she'll just upset you, like isolating. This is something where you can see this happening in real time. Now you might think, how do I find this out? I'm not going to secretly record this person. You don't have to. The parent probably already did. There's probably already text messages, voicemails, emails, social media messages. Even some phone calls might be recorded. One thing about older people is they like to document things. They like to keep things, save things. So they're not going to go through and delete all their text messages like you do, or all their photos, right? You'll be able to get those from that phone if you can get to that phone. So now once we find that, you see it, we see it, we start documenting that. Transcripts, timestamps, other records that match up with that. Maybe there's other witnesses, people that saw this happening, people in the household, neighbors. And then you tie it to that financial pattern of the money going to the wrong place. We analyze the records and we connect the timelines. We can see the person saying something and then an action. They texted something and then a bank transfer. That package is what you hand to your attorney and it's a slam dunk. They can build this case. And that's the difference with attorneys and investigators. You need both. Attorneys can file cases. They're good on procedural. They're good on the law. But we always say attorneys file cases, investigators build them. The investigation builds the evidence and the ammunition the attorney can use to execute the litigation. If you think your sibling has already been saying things to your parent that you should know about, there's probably an evidence of that. There's probably recordings, text message, voicemails, even subtle things. The question is whether anybody is saving them before the parent dies or before the phone gets wiped. That's what you want to start doing today. You can click the link below. We have more information about this. You can even schedule a private consultation call with a licensed private investigator that can help you navigate the process of discovering records that make demonstrating your suspicion to be documented, not just conjecture.
That was pretty good. Well, cool.
Okay, as you've seen on our channel, a lot of the cases we work on has to do with probate fraud or even divorce fraud. And this is a family law commonality where anytime there's some large family event, a death in the family, a divorce, somebody going into conservatorship, maybe somebody going into hospice, or even somebody who is getting up in their years and maybe they go to a retirement home. Here's what happens. When that event happens, there are vultures within the family that look at it like an opportunity to try to get money, because a person who is going through a divorce, a person who is deceased, a person who is going to a retirement home, that's somebody who has assets that are going to be changing hands at some point, either through a will or through a divorce decree or through a settlement agreement. And when that money is loose out in the wild, everybody's going to try to get as much of that as they can. If it's a divorce, obviously one of the parties is going to try to hide assets. If it is a probate case, people are going to try to get some of those assets before it goes into the will, before it goes into probate, or get more of it than they're supposed to. It's bad enough that somebody in your own family is going to be trying to take something that belongs to you. That's bad enough. What's worse is when the professionals who are supposed to be trying to help you, lawyers, courts, judges, guardians, advocates, may not be doing the things that they're supposed to do to help you. In some cases, it is incompetence. In some cases, it is corruption. We have seen sometimes in small towns where judges and attorneys that are supposed to advocate a certain way will kind of good old boy network help out their buddies. We have seen that in larger cities even, maybe an advocate or what's called a guardian ad litem that's supposed to give certain information to the court is just so overwhelmed or so busy or incompetent they don't do the right thing. Maybe your attorney that is representing you is not properly doing filings. They're not putting responses in on time. They're not thoroughly investigating the facts that they're supposed to be putting into your case. Maybe they're not calling you back. Maybe they're not looking up the proper case law to put into your complaint, into your case. What does that do for you? It puts you in a position where you're not getting the best result from your case. Look, anytime there's a major civil court case, litigation, divorce, probate, that's something that's serious. That is a legal matter in front of a government agency. that's supposed to decide things the right way. If that agency is either getting wrong information from the parties or getting a poor performance from your attorney, your chances are much lower of prevailing the way it's supposed to go. What if the court itself is corrupted? We've seen cases where a judge or a court clerk or an assistant has some ties to the opposition party to you. That can affect your case. What if the attorney representing the other side has some undue influence on the court? That could affect your case negatively. Even your own attorney, because of the fact that they are maybe not experienced in this area of the law, are not actively prosecuting your case. What do you do about this? Well, first thing to do is, obviously hindsight is 2020, pick a good representative. The way you get an attorney that's good is not just to call somebody out of the phone book or look up somebody online and call the first person you see. What you should do is look at selecting an attorney, a law firm, the same way you would select some other important decision. When you buy a house, you don't just look at the first house and say, I'll buy it. You may look at 15 or 20 homes in your area before you pick the one that's right for you. Same thing with attorneys. We recommend looking at between 16 and 20 law firms and attorneys, checking out their practice area on their website to see if they handle these kind of cases. Actually look at cases they have handled. You can look at the public records of an attorney in court to see what cases they've handled, which ones they've won, which ones they've lost, what kind of arguments they've made, what kind of motions they've filed, what type of results they've received. Did they win or lose? Are they current? Is the last time they did a case 5 years ago? Or are they doing cases every month? You can see all these things. It's all public. It's all visible if you know where to look. Once you've selected an attorney, interviewing them properly to make sure that they're on your side, they're not dismissing you, they're not just kind of rolling their eyes at your case, they're really hearing what you're all about. Obviously, if you're having a problem with your attorney now, that's water under the bridge. Maybe the next one you hire will be better. What do you do about the current one? Well, do the same research. Find out what type of filings they've done in your case. Look at the filings. Have them looked at by another attorney. Even if you spend a few $100s to have another law firm review your attorney's filings, they can tell you, yeah, these maybe are not that great. You also want to give your attorney as much information, ammunition as you can to help them support you. And that comes from an investigation. Attorneys are not investigators. They don't look up records. They don't do investigation of fraud. They don't do investigations of activities. They just file. They're good with the administrative filing and knowledge of the court system. They're not strategic in many cases. They're not going to be looking up records, figuring out what's the best way to get an advantage. That's more of an investigative function. And we see that all the time. Most of the work we do are for attorneys. As a licensed private investigative agency, our practice area has to do with these kind of cases and fraud and embezzlement and asset searches. So when you are looking to partner with an attorney, make sure you're giving them all the tools and all the ammunition they could use to give you the highest and best probability of getting the result you want in your case. And that's where an investigation may come in. And if you want some more suggestions on what type of investigations might help your case, you can click the link below. You can do a consultation with a licensed investigator and see what might help your case or maybe what might not help your case. Maybe your case is too far gone. But at least you'll know and you'll be able to sleep at night where you're at in your case, where you're at with your defending your rights to get what's supposed to come to you in a divorce, in a probate case, in any kind of civil litigation, even a lawsuit against you or you against somebody else. You don't want to lose because your attorney did something that is not in your best interest.
Remember how Uber completely changed the game for taxis? Made them faster, easier, and just better? Well, someone just did the exact same thing to business funding. And if you own a business that generates $200,000 or more per year in revenue, here's how you can get up to $3 million in funding as early as tomorrow. I'm about to show you how you can access the capital your business needs. You don't need a $100 million business. You don't need to spend weeks filling out paperwork. And you certainly don't need to pay sky-high interest rates. Now, here's the part that's really interesting right now as you're watching this. There are literally
So many times our client asked us, once we find some hidden assets, they say, well, what do we do now? We found these hidden assets. What do we do with them? What do we do with these records? Well, it depends on what kind of case you have. There's some very specific actions you take. Now, remember, we're not attorneys. We're not giving you legal advice. But if you have a judgment against somebody and they told you, I have no assets, I have no money, I can't pay this, I'm broke, I'm poor, and then you find assets, the first thing you want to do, of course, with the advice of a qualified attorney, is to connect those assets to your judgment. And many times when we do work for attorneys, and most of the work we do for asset discovery and asset searching is for attorneys trying to get money for their clients. And the first thing that attorney is going to do is what's called a writ of garnishment. What that means is you take the record of that bank account that was located, you attach it to the judgment, you have the court look at it to make sure the judgment is still valid, they still owe money, they didn't pay you already, and then you go right to that bank and say, this person owes money, give us money from that account. And many times that can be done without even any notice to the debtor, to the defendant. Because if you told them in advance, they might sweep that money out of there. So that's what we normally see attorneys do with that. What if the type of assets that's found is not a bank account? What if it's something tangible like a yacht or a car or maybe some type of aircraft? Well, then what you do is you do what's called a seizure notice, where you say, well, the title is in the name of this person, the DMV has the title, or the FAA for a aircraft, or maybe it's a Coast Guard documented vessel for a yacht, and then you put a seizure on that asset so that you can either sell it to get the money or force the debtor to pay you to release that seizure order. On real estate, what most people would do, and what we see attorneys do, is you put a lien on the real estate. So if somebody owes you $50,000 and they have a $600,000 house, you put a $50,000 lien on their house. Now that house is locked up. They can't sell it, refinance it. Even sometimes you can't even do repairs on it because the contractor will see your lien. And that is a way to get payment. Worst case scenario, if they don't pay you, you can foreclose on the house for that lien. Get good legal advice on all this. So you want to take action. You don't want to just take that asset report with the hidden assets concealed and say, well, I don't know what to do now. You want to take action right away before those assets move around again. If you find hidden assets in somebody else's name, now it gets a little more intense. Now you want to go to that person and say, look, if you're holding assets for this third party trying to conceal it from me, maybe you have liability and I can go after your assets. Again, get good legal advice on all this. But there are certain things you can do in every case to take the records you have located, finding hidden assets, and take action on them to get paid what you're owed. Remember, when somebody's hiding assets, it's not that it's their money hiding from you. It's your money that is just temporarily in their control. You want to take your money, what's rightfully yours, put it in your bank account, not in theirs, where they're enjoying it and living life with the money that belongs to you.
Wait, harvest your crops. My husband's gonna show you his farm on Solitaire Grand Harvest. You better be nice. Come on, babe.
Today we're going to talk about the top 14 locations to look for hidden assets for a debtor. For each one of these locations, we're also going to tell you how to look for them, where to look, and what the reason is a person might hide assets there. Be sure to click the like or subscribe button so you get more detailed description videos for each one of these locations. The first one is bank accounts, and you'll see on the screen we have an example of a bank statement. The way that people sometimes hide assets in hidden bank accounts is they'll put the address or even the name elsewhere from their main residence or from their main identification. To find hidden assets, you're going to use things like Swift code lookups. You're going to use check verification system lookups to discover hidden bank accounts and also discover what the activity on those accounts are. You may find that there's deposits that come from a regular location that might lead to another flow of funds, another source of assets. So bank accounts is the first one. The second one you can look at is real estate. Sometimes people would quit claim a property to another name if they own real estate in their name or they own property in their name. They may do a quitclaim deed to hide it in somebody else's name, to hide it in the name of a trusted person, maybe a relative, maybe an attorney. And the way you're going to find that is by looking at the real estate records, not to do a title search on that property because that's only going to show you the current owner. You're going to look at historical documents and do title forensics on prior deeds to find out who previous owners were. Sometimes somebody will quit claim a property 2 or 3 times to try to put some distance between them and the new beneficial owner. Another way you can discover hidden property is by looking at who is paying the taxes and insurance on a property. If, let's say, Joe Schmo tries to hide an asset by quit claiming a property to Sally Smith, well, Sally Smith is not going to pay the insurance and taxes on a property that she's just holding for somebody. So if you look to see who's paying the taxes and insurance, you can find out who the real owner is. And tax records are public. You can look in the tax assessor's records. Insurance sometimes shows up on settlement statements or on mortgage contracts. So that's a good way to find those records. The next thing we're going to look at is corporate records. In many cases, a person will hide assets under the name of a corporation. So if you look at a corporate filing, if you notice, here's an example from Delaware, it has the submitter's information, and in most cases, it'll have officers, a president, a vice president, secretary, and those beneficial owners will be listed. Now, the name of the corporation may be public. The other names you may have to put in requests for, but if you find that a corporation has an officer of your debtor, Joe Schmo, you can find assets held by that corporation that may be subject to recovery. Another source of hidden assets is insurance policies. This is very common, especially in divorce cases and consumer cases, where an individual will prepay or overpay insurance on life insurance, maybe overpay on vehicle insurance. If they have a corporation, they might even overpay general liability insurance, and then they'll get refunds on those policies later. Sometimes they'll pay ahead many, many years. If you have a corporate insurance policy that's $3,000 or $4,000 a year, if you pay 10 years in advance, you can maybe put money away where it's going to not be available to creditors. So look at insurance policies. Some of them have a cash surrender value, for example, in the case of life insurance, and that's a very common way to hide assets. And a similar overpayment is on taxes. Sometimes people will overpay their taxes to put money out of the reach of creditors. For example, if at the end of the year you owe $10,000 in taxes, but you send the IRS $200,000 in taxes, you can actually prepay future years and have that money be held by the IRS so that it's not in the available realm of creditors. Remember, anytime you're doing asset searches, anything regarding court cases or legal operations, you want to get good advice from a qualified attorney. This is just investigative suggestions. This is not legal advice. We're not attorneys. You want to get good legal advice before you take any action. The next example of where assets are hidden. We see this quite a bit lately. This is a settlement statement for real estate. So when you buy or sell a property, all of the transactions related to that property go onto this statement. There's the buyer side and the seller side, and it'll show what the sales price is, what the settlement charges are, things like taxes and prorations, and it'll say the gross amount due from the buyer. So if you're buying a property, this is how much you have to come to the table with. And that is reduced by the amount of the mortgage. If you're the seller, it'll show you what the sales price is and what you have to pay out. Maybe you have to pay commissions. At the very bottom, it'll say cash at settlement to or from the seller. So if you're selling a property, this is what you walk away from the table with. And it's after all of the things. If you have a loan on the property, if you have a second mortgage, if you have taxes due, at the bottom of this, the buyer side, it says cash at settlement to or from the borrower. So once you get a copy of this HUD-1 statement, you can see who walked away from this settlement with cash. And if your debtor, let's say, is the seller, you can see that at this closing, they walked away with X amount of dollars. Let's say it's $50,000. Well, you want to look to see where that money went. If you don't see a record of it going into a known bank account, you want to see from the settlement company, did they wire transfer the money somewhere? Did they give a check? Where was that check cashed? This is a good way to try to hide assets. Sometimes people will take this check, cash that settlement check, and they'll go deposit it into another bank, or they'll just cash it. If this check, let's say, was drawn from the closing agency from Wells Fargo Bank, they'll walk into Wells Fargo and get cash and hide that money. So this is a very good way to try to discover hidden assets. Another common, or I should say less common way to hide assets is to purchase a conservation easement. Sometimes a buyer will be able to put money into a conservation easement and not have this be public records. Conservation easement is something you can pay money for. You own it, it's valuable, but it's not something that's usually looked for or on the books. And there's ways of searching this depending upon the environmental agency that's holding it. But conservation easements are becoming more popular, even though they're a very small portion. You want to make sure you uncover every stone. Here's something that is very controversial. This is an example of a stock issuing of a shell corporation. Sometimes people will form a shell corporation that will own other corporations, or that will just be an umbrella over other assets. It's a little bit different than the direct corporate records because it's just a shell. It's sometimes a blind shell where the records are obscured by a registered agent or other parties that may not be easily identifiable with the debtor. Many times we discover this because we'll look not just at this document, but once it's filed, there'll be a little stamp up here in the corner or on the bottom of a law firm where it's going to be sent to after it's filed. And if you look at the send to block on any document, a deed to a property or a corporate filing, sometimes you can identify the attorney, and we'll often find that that attorney is associated with the debtor. The next one is a little bit of an obscure tax deduction scheme. This is number 9 if you're keeping track. If you have any kind of corporate record, you can do a 199A tax deduction. And if you go through the method of getting these deductions, you can actually hide tens of thousands of dollars. If you look here in one example where the taxable income is $20,000, you can actually deduct $49,750. Sometimes this money will have to be recaptured at a later date. But if you structure your tax return the right way, you can get deductions initially that put money aside that maybe you have to recapture later. This is a very common way for debtors to try to hide assets. The next one is number 10 is retirement funds. People will put money into a 401k or an IRA or other retirement fund plans that in theory are out of reach for a creditor, but those can be searched as well. This is something that is a scheme that many people think is going to work, and they'll actually go and buy poker chips. They'll go to a casino, they'll purchase chips, they'll maybe gamble a little bit and then walk out with the chips, thinking they can hide those as a physical asset. But in most cases, casinos keep records of this. They have a gaming history that'll show, here's an example from Caesars, all their casinos where this person, they have a gambler number, what all their transactions were. So poker chips don't work. We had one debtor one time purchased a bunch of poker chips, put it in a briefcase, and tried to hide the briefcase underwater, hidden, in a lagoon behind their house. And it was only discovered because we found the record of that person. They made it easier because they used their player's card to buy the chips so they could get a free steak dinner. And it was easy to discover that way from the poker chips. And remember, whenever you're searching for assets, you want to look at all the different asset classes. Another very common one is vehicles. Somebody can take a vehicle title and put it in another name. One thing that is a very common element from all states, it's hard to see in this example, but the back of a title has places where somebody has to sign. So anytime a title is transferred, there's a signature. That old document is retained, and there are title records that can pull that up at a later date, so you can find out who signed the title over to somebody else. Similar record is a vessel. This is U.S. Coast Guard Certificate of Documentation. If you have a vessel that you don't want to register with the state, let's say if you live in Florida and you have a vessel you want to try to hide from registration, you can make it a Coast Guard documented vessel, document with the Coast Guard. The records are a little bit more obscured, but they can be searched. and find that that vessel is being hidden. The last one is very, very common. It's what's called delayed income. We have many, many clients who find that their debtor has talked to their employer or worked with their employer or even done it suspiciously to delay their income. If they have bonuses, if they have commissions, if they have raises or any type of profit sharing, they'll work with their employer to delay that to at a later date. They'll say, look, all my bonuses, commissions, let's put that on pause for a few years. And they'll build up a balance with their employer. And in the meantime, they'll draw down their savings. They'll pay their bills from whatever cash is left over. And sometimes they can even make it look like they're losing money. They're spending more than they're making. And then the settlement agreements or spousal maintenance or other agreements don't have as much monthly payments. Even things like garnishments only pertain to a certain percentage of income, or there's a minimal amount of income that
We're going to end this broadcast for right now, and we'll resume later with more information on this topic. Thank you for joining us.